We've just crossed the halfway point of 2021, so now is a great time to take stock of where the real estate market is today and to look forward to the second half of 2021 and see what's expected to happen there. I'm Eric, owner and broker at Andersen Homes, and I specialize in Chicagoland real estate, especially in Western DuPage and Eastern Cook counties. Be sure to subscribe to my channel to make sure you're always up to date with the current real estate market. We'll begin this market update by looking at the current demand for homes and end by looking specifically at what's happening in the Burr Ridge market. So first, let's look at demand. There was an interesting observation in the June broker report. It said, this month's overall homebuyer demand rating equaled 86 on a 0 to 100 scale, down from 88 last month and marking the first sequential decline since November. A few weeks ago, I was looking at a report from the Mortgage Bankers Association, and it indicated that new mortgage applications had decreased by something small, like 1%. And while that may not sound like much, the fact that the number didn't increase is significant. The broker report makes the same point. Buyer demand is starting to decrease, at least ever so slightly. Meanwhile, sellers are continuing to list their homes. Just the other day, I was talking with an agent in my office who is looking for a home, and he made the point that a few months ago, there were 10 homes for sale, only 10 that met his criteria. Today, there are over 50. While I suspect that's probably more of an increase than is typical, I do think buyers today will have more options or face slightly less competition than they did just last month. The Home Purchase Sentiment Index tracks whether or not people think it's a good time to buy. Buyers have caught on to how competitive the market has been, and only 35% say it's a good time to buy now. At this time last year, over 61% said it was a good time to buy. And while the market is certainly more competitive today than it was at this time last year, the data shows that buyer demand is beginning to wane. So much so that there has been a 26% drop in the "is it a good time to buy" stat. That's not insignificant. Coupled with the low interest rates, this means there is definitely opportunity to secure a purchase, hopefully with at least a little less competition in today's market. When you look at the data from Showing Time, the MLS app that tracks showing activity, we see that showing activity has decreased almost 9% since last month. In fact, the pace of showings is back to where it was last winter, winter being one of the traditionally slower times of year for real estate. My own showing calendar makes the same point. If I was averaging 20 showings per week a month ago, I'm probably down to about 15 today. In other words, I'm still out showing an awful lot of homes, but today I have more of a chance to catch my breath and even hopefully eat dinner. Whereas last month, I had to forego some of those silly things like sleep and food because I was out showing so much. So what we're seeing is a slight downtick in demand, but the demand is still certainly out there. Make no mistake, it's still a seller's market, and buying a home right now is a full contact sport. So if you are in the market to buy, be prepared to put your best foot forward. But buyer fatigue is starting to set in, and this is not a market for those casually looking. The summer market traditionally brings out some of the most serious buyers, particularly for those looking to get into a new school district. The competition level has only further discouraged the looky-loos from coming out. It's too competitive for them. This is great news for sellers, as it means you're less likely to get unmotivated pretend buyers clowning around through your home right now. This is happening for several reasons, including record price appreciation. Last week, Case Shiller said homes nationwide had appreciated 14.6% over the past year. Normal appreciation is around 2 or 2.5%, and this is over 7 times that in a single year, which is obviously significant, especially if you're thinking of selling. Now is a great time to cash in. Again, you'd typically have to wait 7 years to get this much of an equity increase as we've seen in the past 12 months. Inventory is still near record lows, even though it's looking like it's starting to pick up, and homes are continuing to sell for record levels over asking price. Several of my own listings have sold over asking price, and sometimes before we're even on the public MLS. Overall market time remains at record lows, as do interest rates. Last year, the 30-year fixed rate loan hit a record low 16 times. Add to that the fact that people spent 2020 trapped at home, realized they didn't love it there, were forced to save because they couldn't go out, and many received government stimulus money. These conditions created a case of Zillow fever like I've never seen. As bad as the pandemic has been, Zillow fever has been nearly as bad. You can consider me your vaccine for that. If you're thinking of waiting to purchase until things cool off, prices are not likely to decrease anytime soon, and interest rates are so low it's hard to imagine them going anywhere but up. As of this recording, the average 30-year fixed rate loan was at just over 2.8% compared to the long-term average of 7.85%. As everyone learns in Econ 101, price is largely driven by supply and demand. In real estate, when the available supply exceeds 7 months, meaning it would take on average 7 months to sell all of the available inventory, that's considered a buyer's market. Anything below 6 months favors the seller. Today, the national average is sitting around 2.5 months. That's not just a seller's market, but a seller's market on steroids. The notion that prices will drop suddenly or we'll be in a buyer's market anytime soon doesn't seem likely, though hopefully we are making our way toward a more neutral market and restoring balance to the force. On the seller side, equity has increased dramatically. According to CoreLogic, the average increase in equity over the past year was $33,400 nationwide, which is almost a growth of 20% in equity. And just over 38% of homes are owned free and clear, the paid-off home mortgage. Dave Ramsey would be proud. As he always says, in his view, the paid-off home mortgage has replaced the BMW as the status symbol of choice. And speaking of Dave, I am one of his endorsed local providers for real estate in the Chicagoland area. I found his teachings on personal finance to be helpful, and frankly, I probably wouldn't even be selling homes or have my own brokerage if it weren't for Dave. I highly recommend his podcasts and books, and helping buyers find the right home at the right price at the right time is my priority, so don't hesitate to reach out to me for guidance. I am here as a resource for you for the long haul. But back to sellers. With all of the increase in equity, 20% on average, nationally, sellers are starting to get the idea that maybe, just maybe, this might be a good time to sell. Indeed, oh seller, it is. Never better, in fact. The chief economist at First American said, "It looks like existing inventory is starting to inch up, which is good news for the housing market, parched for more supply." Parched indeed. This market has been incredibly thirsty for new listings, and sellers are the Gatorade. This quote from Realtor.com sums up the current market well. The improvement we saw in new listings growth from May to June shows sellers are entering the market historically later in this season, which could mean we'll see home buying continue into the fall as buyers jump at new opportunities. If you're thinking of selling, now is a great time, but it's important not to be too unrealistic. Now is a great time to cash in, but as the saying goes, pigs get fat while hogs get slaughtered. In other words, feast, but don't get too greedy. Being overly ambitious will almost certainly be counterproductive. But if you wait, you are missing out on a very attractive market. There really hasn't been a better time to sell, and sellers are starting to catch on. But at the same time, buyers are starting to wonder about the wisdom of buying now. As inventory increases and the pool of buyers decreases, that should cause appreciation to at least slow down and make for a more competitive market among sellers. Looking ahead to 2020, let's also consider a few forecasts. mortgage rates are expected to increase. All of the four major forecasters see rates increasing over the next year, with an average rate above 3.5%, and the Mortgage Bankers Association projecting rates at 3.9% by the second quarter of 2022. Of course, only time will tell what the rates will actually be, but there is a strong consensus that they will increase. The question is by how much and when. But this is something buyers need to know. It's going to cost you more money in the future to buy a home than it does today. Over the life of a loan, this could mean tens of thousands of dollars more to buy a home at the same price point today as it will in a year. For example, on a 30-year loan of $500,000, you will pay almost $240,000 in interest at the current rate of 2.5%. At 3.5%, the same loan of $500,000 will cost you over $308,000 over 30 years. To put it simply, waiting 1 year is expected to cost you $68,000 in interest alone, and home prices are expected to increase too. So in short, you get more for your money today than you will in a year. In terms of home prices, we see a universal expectation that appreciation will decrease in 2021, but it is still increasing. Some of the more bullish forecasters have it over 10%, while the more bearish ones are between 6 and 8%, with an average of 8.9%. That's a far cry from the current appreciation of 14.6%, but what's important to note is that prices are expected to continue to go up, and well above the typical 2.5 year-over-year increase. If Dr. Seuss sold real estate, he might say appreciation is slowing, but it's still growing. As we've said, prices are driven largely by supply and demand, so keeping our eye on inventory will be key. New construction certainly hasn't kept pace with the inventory crisis, largely due to the cost of lumber. And while that is starting to come down, builders are still having a hard time finding labor or qualified people who are available to build their homes. Lots are also selling for a premium, so that remains a challenge for builders too. A good friend of mine is a builder at Ryan Homes, and he says they've cut back on the number of new homes they are building. New construction permits remain down from where they were expected to be at the beginning of 2021. So while new homes are continuing to be built, there aren't enough to fill the void left by the lack of new builds over the past 13 years. So look for new construction, but it's not enough to solve the inventory problem. Some buyers and agents have asked me about forbearance, suggesting that once forbearance ends, we're going to have a foreclosure crisis. But as you can see, the number of homes in forbearance is continually decreasing. So it's not likely that we're going to get a major bump in inventory due to foreclosures. Plus, a recent study showed that 96% of homeowners have at least 10% equity, which means that if someone is experiencing financial hardship, most homeowners can easily sell their home and still put money into their pocket. Foreclosure only becomes a serious concern when the level of equity is either negative or very low. The other concern I've heard about sometimes lately is whether or not we're in a bubble. But inventory and equity levels just don't bear that out, at least in the macro. One area where there may be a bubble risk is in areas where buyers have been purchasing a second home, for example, in beach towns or vacation areas. As you can see, that market increased by 25% from last year, while the primary home market only increased by 5%. And as you can see, investment properties are way down. But for someone who maybe has buyer's remorse and is thinking of selling their second home quickly, that could be a challenge, though even that could help solve the inventory problem we've been having. In general, more inventory is desperately needed. This quote from JP Morgan indicates the fact that it's actually a good time to buy or sell. Home buyers. Interest rates are still historically low, though they are inching up. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon. And we believe that they are more likely to keep rising. If you're looking to purchase a new home, conditions now may be better than 12 months hence. Turning to the local market in Burr Ridge, there are several things worth noting. New listings have been steadily decreasing over the past 3 years, as you can see. 2020 saw a decrease in 11.2%, while this year we are down an additional 3.1% over 2020, or a full 14% from where we were in 2019. As you would expect then, this has meant an increase in sale price. Prices actually dropped by about 3.5% in 2020, but they have since shot up by a full 15% here in 2021 versus where they were in 2020. Again, this is largely a function of low inventory, and it illustrates the supply-demand principle that we've been discussing. Market time has also followed suit, which also increased in 2020 but has come back down in 2021. While it's still higher today at 81 days versus the 62 days of 2019, the increase in sale price of $62,500 over where we were in 2019 is probably more than enough to justify an additional 19 days on market. Just to do the math, an increase of $62,500 over 19 days comes out to an average profit of $3,289.47 per day. Not a bad return on investment for a couple of weeks, if you ask me. It's also worth commenting on market time. As competitive as it is, sometimes buyers will ask me what's wrong with a home that's been sitting on the market for 45 days, which I know seems like an eternity right now. And the answer is nothing, at least not necessarily. 45 days is still a solid 2 weeks below median market time. Just because some homes are selling within hours of listing doesn't mean this is the norm. And for sellers, while it is possible to sell very quickly or even directly off the private listing network, that doesn't mean there is a problem with your home if it takes 2 months to sell. That's still par for the course, even in this market. Well, I hope you found this market update helpful. As always, if you're thinking of buying or selling a home in Burr Ridge or the eastern DuPage, western Cook counties, contact me today. And if you enjoyed this video, be sure to subscribe to my channel and come back each week for updates. I'm Eric with Andersen Homes, here to remove the headache from real estate and provide expert guidance for your next purchase or sale.